Good morning, guys. Welcome to Friday, January 31st. Month of January is over, last trading day. And it's been a pretty rocky ride, but to the upside. So far, no panic selling, but it's been a pretty volatile. Lots of cross currents going on. Things are shaping up, though. The new policies are starting to uh, be enacted, and they are a lot more business friendly. And I think that's why the general direction has still been holding on and been to the upside. Then you get these curveballs, the deep sea curveball and all that stuff. Can never protect yourself from that. That's going to be happening. So starting off this move, we have been cleared that 61.10 here in the overnight, and we are holding pretty good, pretty well above it. 61.10 was the edge here from yesterday. Adjusted that, shifted it up a little bit, but we are holding well above this area, this 61. Well, it's the 6100 area to 61.10. So we are holding well above that, and we are in good spot to run it up here to maybe even make new highs. So news this morning, though. This morning we got the PCE number come out. Personal income and outlays, and you have the PCE read in there. That's an inflation read. That's going to be potentially causing some volatility. We also get employment cost index, but I think that the personal income number is going to be the one to pay attention to. And then at 9:45 we get Chicago PMI, and that's about it this Friday. All right, so PCE at 8:30 and 9:45, Chicago PMI. But if you had some earnings come out, I think Apple reported yesterday. They're up $10 today, this morning. I don't know if someone else had reported, but so a lot of big companies have reported so far, and I mean across the board, I think the has been more positive than negative. So I'm going to start off today with a bias to the upside. We have cleared that 6100 yesterday. We did not clear that. We were just below it. But now we are above it. So at this point, I think we're taking out this low volume area right here at the 61 to 6110 area, and we are holding above it. So as long as they do that, I'm going to stay on the long side and see if they can retest these highs, maybe take it higher. So they're going to buy against the 6115s, the 6100s. There may be an edge in between here at 6110. I had a, well, maybe I'll put it in there. Yes. Since I keep talking about it, just pop it in there. It's going to get just a little bit crowded. It's right there at the 61, that little area right there. Adjust it a bit so that here you have your 6110s. All right. So, all right. So I always try to avoid making things too crowded, but here it's so you had the 6115, 6110, potentially that little edge here could potentially be something, and then the 6100s. We're going to buy against these three areas for rotations back up below 6100s. Are going to be one level below the obvious. It's going to be 60, 85 to 90, and but that would be the end of it. If they start trading below 6100, I'm going to take off the long bias. Still looking for a potential buying opportunity against the 60, 85, and that would be more just the one level below the obvious kind of a trading setup, you know. But starting off from the long side and see if they can retest the highs, potentially take it higher. They're going to be a little bit less aggressive on the short side. We have a potential short at 6130, one here at the 6150. And they won up at 6160, probably pretty light, but we have a little bit more to lean on against that 6130 and the 50s. It could also be an edge in between here, but I'm not going to draw that out. We'll see if that develops or not. So that's the starting point from the ES, starting off on the long side, as long as you hold above this low volume area. And if they reverse retest, they say early weakness to retest this area, looking for buying opportunities at that point. Below 6100, taking off that long bias. All right. So that's the ES to get started. Looking at the NASDAQ and the bonds, the bond market. Pretty much holding around the 114. They're not quite taken out this upper edge, but they are building value. You know, they're just getting ready for it, but they haven't quite been able to take out the 115s. So I think that's going to be a pretty key area. If they take that out, we have a shot at heading back up a bit on the bond market, and the yields come down quite a bit, and that would be a welcome sight. And I think that's going to keep that the small and mid cap stocks going for sure. And if it doesn't, they start trading back down again. Yeah, well, we're just going to stay in the in this lower range. Maybe even run down and test the 113s, the 112s, the 110s. Oh, sorry, the 111s here. The high volume nodes on the way down here. So we'll see. And we are right up here against an upper area of resistance. And our default trade is to try to trade the failure to take it out. So looking for short setups against the 114.20, 25s, and the 115s for rotations back down. And then looking to buy against 114.08, 114.04, 114s for rotations back up. So if they start trading below the 114s, I'm taking off the long bias. And at that point, I think they're backing off a little bit too much. But if they start getting some early strength, or they start running it higher, looking for short setups and watching that 115 edge. They've been up here trying to take that out. Eventually they will probably, and then we can see this whole thing opening up. Nasdaq also up again, finally up against that upper edge. Yesterday it wasn't too bright. It was kind of holding here to the downside. Now in the overnight they've been trading higher. They're up here against the 21,800s, and at this point we are looking at potential failure to take it out. That's the default trade. I'm starting off on the long side, looking for retest of the highs, potentially higher. So I'm still looking to buy weakness as early on though in the session. But if resistance holds at the 800s here and they start backing off, and they start backing below that 21,670, bets are off. We're taking off the long bias. We're trading back in this lower range again. So if Nasdaq can blow through this low volume area, clear the 860, 850s here, this next area of resistance, we're going to be up in this upper area and have another shot at maybe testing that 22,000s. So starting off with a bias to the upside. Let's see if they can take it out, but let's be mindful. On the Nasdaq, we are right up against a pretty good area of resistance, and trading that failure is kind of what I'm looking for to get started. But Nasdaq could easily blow through it, and if they do, especially with the news we have, well, then we're going to be straight right up in this upper area, and I will just stay on the long side at that point. So initially looking for shorts against the 800 and then the 845 to 50s for rotations back down. But if they clear the 850s, staying on the long side, let's see how far they can take it at that point. But if we get early weakness, I'm going to be looking to buying down to that 660, 670 area. And if that comes out, I'm taking off the long bias and going back range bound. All right, so that's the Nasdaq. Oil and gold. And gold, after this massive melt up, is still holding on to the 2850s. Hasn't quite gone to 3,000, but 2850 holding at it. So I would just stay on the long side, looking to buy weakness on gold. At this point, down to that level, the 2830s. So that's pretty, and it's not clear that 830s. There's two single print sections here at 35s and the 32s, or 31 to 32s here. And if they clear both of those, I think they can run it even lower. So at that point, I think we may see some retracement. But at this point, we have just 1 day running it up, so we don't have a whole lot to lean against. So this is a move out of the middle, no doubt about it. So you should trade it as such. So looking to buy weakness for rotations back up. Not going to be aggressive on the short side at all. The best short I can see is the 2850 right now, but as I said, in the move out of the middle, you don't want to be stepping in front of that freight train. You want to wait for that to enter phase 2 and 3 before you start being aggressive on the short side. So looking to buy weakness, 2840s, 36s, 31, 32s here for rotations back up, or 31s, I think it is. Yeah, for rotations back up. And below the 31s, I'm going to take off that long bias. And going back more range bound, looking for a retracement trade down to the 2820, maybe lower. So we'll see. But today, like usually, you'll get the retest of the highs before they fail. We'll see if that happens or not. And then finally, oil. Oil looking at the pretty range bound, but a slow drift to the downside. It's not the prettiest drift. It's like a slow grind to the downside. And you get days like yesterday when they start taking it low and then retrace, and just if you try to get short, you just get run over and get caught, and then have an overnight, you just trade right back down again. So I'm still thinking short side of the market just have to be a little bit more deliberate and look for shorts against these upper areas. So looking for the shorts against the 73s, the 73.50s up to the 74s. If you get short against those resistance areas, that's when you have your bigger opportunity to be in a trade where you have a good trade location. Getting short on the way down, it gives you nowhere to go, and that's usually that's the trading when it fails kind of a trade, but you give up the trade location when you do it. So that's your trade-off. And sometimes that works, sometimes you just get caught. So it is a delicate balance for sure. I would stay on the short side. I would just emphasize range-bound trading, but staying on the short side and looking for short setups against that 73, 73.50 and the 74s, rotations back down, and buying against support with a bit of caution, but 74, oh, sorry, the 72.70, 72.40 and the 72s. With a little bit of caution, but as you can see, you get a probe to the downside and pretty good reversal. So those long trades, they work pretty good. Not for huge trades, but probably for pretty good scalps to the upside. So rotations back to the mean is kind of the way I would trade that. Looking for a buying opportunity, and when it's starting, when I try to take it lower, and then for rotations back up to the mean. All right. So that's oil and gold. So trade oil, a range bound with a slight bias to the downside. Gold from the long side of the market. And back to the ES, and I'm just blowing through this pretty quick today. Yeah, so the ES, leading long, they have cleared their low volume area. And NASDAQ, we have started from the long side as well, but they are, as I said, up against resistance. Let's remember that. All right, so we'll see how that goes. All right, so watch, we got another 12 minutes before we get that PCE index. So I'm just going to wrap it there. And good trading. It is a Friday, so end of the month. So you may want to be just trading into a bit of caution, watching for cross currents. First month of rebalancing may occur, but I don't think it's going to be that big of a deal, since most of that happens beginning of the month in January. So we will see. All right, so good trading, guys, and I will see you back at 11:30 for the next update later.